Kathy, good to see you. So is the carry trade back on for good?
I wouldn't say for good. I think that what we'll probably see is a little bit more momentum here because it's been quite a number of weeks since we've seen across the board strength in carry trades. Usually what we see is the Aussie yen, the Kiwi yen rise, but the pound yen and dollar yen slide. But now that we have across the board, rise in carry trades, it tells you that one way or the other, risk appetite is back. Now, to be very careful, though, because Bernanke is speaking on Wednesday and Thursday, and his words can easily erase the move that we've seen so far in carry trades.
Could you not possibly say something about inflation that could possibly support the dollar as far as Bernanke is concerned?
He could. I mean, import prices were strong. Producer prices are due for a release tomorrow. I think that that's going to be hot. So, he could talk about inflation, but I don't think that he's going to put that much focus on it. He's going to have to recognize the fact that food prices is rising globally. But for the Federal Reserve, nothing in tomorrow's numbers should take away the strong possibility that we'll see 50 basis points of easing come March.
So should people play the yen on the basis of risk appetites alone, or do you think they should start considering the interest that sovereign wealth funds are having on Japan and the impact that it might have on the yen? Because China's been looking at investing about $10 billion into Japan.
Yeah, that's a fantastic point. I mean, that's part of the reason why I don't think this carry trade rally is going to last. Because, in order for carry trade rallies to last, we need to have an environment where we have low volatility. And today's, 200-point move on an intraday basis in the Dow is just the opposite of low volatility. And because of that, I think that carry trades are going to get tired. We're not going to see the glory days return. So I think that it's important to recognize the sovereign wealth fund investment that China is possibly going to make. If that becomes action, that $10 billion could definitely stifle the move that we have right now in carry trades.
Now, the big focus today is the IFO Business Sentiment Survey out of the Eurozone. What do you think that report is going to reinforce? That the ECB will be cutting rates soon, or are they going to be holding back?
I actually think that the IFO report is going to be firm. Right now the market's looking for business confidence to deteriorate in Germany. But if you take a look at the manufacturing PMI numbers that came out in January, also those preliminary Eurozone PMI numbers that came out last week, they weren't all that bad. And I think that they tell us the ECB is in no rush to cut interest rates. And I think that tomorrow's German IFO report should be Euro positive.
Well, the U.S. is also packed with economic data that could move the dollar. You got PPI tomorrow, and that could very well show some bullish numbers.
Yeah, exactly. I mean, I think that PPI is going to be strong. We also have U.S. consumer confidence coming out at 10 a.m. Eastern time. And that's really where the linchpin is. I mean, that's where I think that we could cap the dollar's rebound, because consumer confidence is probably not going to be all that strong. I mean, a lot of consumers are facing tough loan conditions, are facing higher oil prices, higher food prices. We had this report last week that talked about how a lot of U.S. consumers are going to penny shops or discount shops to buy their groceries. And even though those groceries may be past their best eaten date, the consumers are still buying it because they're feeling the pinch. And I think that that's going to ride on confidence.
All right, so when do we see dollar euro at 150 then? I mean, if you're very bullish on the euro against the dollar.
Exactly. I still think that the euro dollar is going to continue to rise. It's held up very well over the past 24 hours. Granted, it did not rise like everyone else, but it still remained near its highs. I think that Bernanke's comments and the GDP numbers, things like that, and Chicago PMI that we get at the end of the week is what's probably going to take the euro dollar to all-time highs.
What about the commodity plays? Do you like the Kiwi dollar? Because the New Zealand currency is now hovering at its highest in 23 years. I mean, what is it being driven by? Is it more of yields or the higher commodity prices?
There's three things right now that's driving the Kiwi dollar's move. And it's really bizarre because there's been no economic data released from New Zealand over the past week. So the three things are yield, which is, an increase in risk appetite. We also have Euro-Dashi bond issuances. The Japanese are pouring back money into New Zealand dollars. And then we have that drought that New Zealand's facing right now, and that's driving up milk prices. So all those three things are contributing to the New Zealand dollar's rise. I think that, that Euro-Dashi bond issuance just shows you that with 8.25% interest rates, it was just a matter of time for the New Zealand dollar to catch up with the Australian dollar's move. I'm still bullish. I think that we'll go to test the there's a 81 high above 82 cents. I think that's where we're headed to, and that's certainly going to, to be a nice point to look for in the New Zealand dollar.
Kath, we got about 30 seconds here. If you're going to be trading the commodity currencies, do you favor that against the dollar or more against the yen for better returns?
I favor it more against the U.S. dollar because with carry trades, you got to be really careful. The dollar yen could really, rise and fall based upon Bernanke's comments. That could that could weigh on the New Zealand yen pair as well as even the Aussie yen pair, for example. But we've seen Aussie dollar, Kiwi dollar have been very, very strong in the face of all this. I still prefer long the commodity currencies against the U.S. dollar, though I don't like I don't like long Canadian dollars.
Okay, we hear you. Well, thank you so much for joining us, Kathy Lien.